towards this computer. Yeah, I'm recording. I will send that out. Thanks for the reminder, whoever did that. Um, I again cannot underestimate how much it matters to have a team that cares. As I was saying, you might be wondering why do I care? As someone that's British sounding, British looking. If you have a look at our website, and I'll show you the link to that afterwards, it will tell you my story. And my grandfather actually migrated over to the UK from Spain, hence my surname, and was able to buy his own home here about 40 years ago. Unfortunately, my grandfather has passed away about 12 years ago, and my grandmother passed away last year. The money from that house was the only thing that enabled my grandmother to actually get the care that she needed at a really difficult time after she became very ill. And it's not just for that money that it mattered. Of course, I had many happy memories in that home, as did they. It was a home they actually owned for, I think it was about coming up to 40 years, 30 something years. So through seeing that and how big of an effect that's had for my family, I know that matters for people that are moving over here to start building their financial foundations and stability for their family. So this is what drives me, and this is what drives First Time Finance to help people like yourselves. You're going to see lots of smiley faces in a second. Here we go. Here's our amazing team as it stands. So if you reached out to us, you would speak to Jamila, you'd speak to kind of all of our team. And yeah, this is who would be able to guide you through this process. I want to skip past this bit where I'm telling you about us because again, I want to get to the real information that you've come for. But we also have some fantastic client feedback on Trustpilot. Again, if you type in First Time Finance online, you'll find us. You'll find us on Trustpilot, and you'll see lots of amazing reviews as you see on the screen here from people just like yourselves that moved to the UK that we've been able to really help. So yeah, I'll talk more about at the end about how you can get in contact with us. But hopefully that's interesting to see what are the problems that people tend to run into and how we actually solve them and how we hopefully could help you with that as well. So without further ado, I will move into kind of the core content itself. So if you want to buy a property in 2026, what do you need to have prepared and what do lenders actually care about? Now, it comes down to four key factors, and this is what is shown on the screen here. This is something I call the four key pillars or the four key requirements in order to get a mortgage in the UK. So I'm going to go through all four of these in a lot of detail because it's really important when you're planning to buy in the UK that you understand what you need to do to build your credit profile, how good of a credit profile do you even need, what income level you need, and what does that mean for the amount of mortgage that you can actually get. For your deposit, how much deposit do you need? That's a huge stumbling block for a lot of people. And with a residency status, of course, it's important to understand about your visa, but how that actually affects you getting a mortgage. So I'm going to go through all of these step by step. So the first one actually is the visa and the residency status. So the first thing I want to make very clear is that yes, you can get a mortgage when you're in the UK on a visa. The details do matter though, so we're going to go through this. So what lenders are firstly looking at is the actual type of visa that you're on. Now, we have secured mortgages for people that are on skilled worker visas, health and social care, so of course the tier two bracket, graduate visas, spousal and dependent, global talent visas, student visas even. Of course, you've got a limitation on the time that you can work, etc. on those, which can make it a bit more difficult. But we've helped people with all sorts of visas, innovator visas, etc. So that's the first point that matters. The next point is then how long you've lived in the UK. So if you have been living in the UK for more than 12 months, there are quite a lot of lenders that we can access, and that's both with a 5% deposit and a 10% deposit. And I will talk more about deposits shortly. If you've lived here for less than that, it is more difficult, but there are still lenders available as well. Now, the next point that matters is how long is actually remaining on your visa, right? So, generally speaking, as long as you've got at least 6 months remaining on the visa, we should be fine. Some lenders do have a 12-month minimum. So again, it depends on the lender that we go to, but you can see you don't need to have 2 years, for example, remaining on a visa in order for a mortgage lender to lend to you. As I put on the screen here, there are some lenders that would accept as little as 3 months remaining. Of course, at that point, it's important for you to be careful about, okay, do I know I'm going to be getting an extension? It's not just about what the lender cares about. We need to worry about yourself as well. But for most people, it's almost guaranteed they will get that extension. So I did mention at the beginning that I wanted to touch on potential immigration changes, etc. Which obviously, hopefully, I don't even need to say that I'm completely against. And it's extremely frustrating because I know how many amazing clients we have that have moved to the UK based on promises that were made and that ultimately seem like they might change, which is just completely unfair. And I'd like to see it. And I've been speaking to people and lawyers and so on about whether it's being challenged in court, for example, because I just think it's completely unfair. To talk about how this might affect your chances to get a mortgage, I want to be very clear and say it doesn't. So I know a lot of people, when I've mentioned this online, have said, oh, but the government said they mentioned you can't have any debt. So they're talking about public debt, which is debts for things like the NHS or taxes, for example. It is not personal debt. So it doesn't include mortgages, it doesn't include credit cards, loans, etc. People then normally ask, but what if I had to leave the UK? So in the event that you had to, you would still be able to own the property, right? So that's the reality of it. They wouldn't force you to sell the property. We have international residents as clients. So these are people that normally have moved to the UK and then have left at some point, and they still own their property. And what a lot of people do is they just rent it out. I know we had a lot of people coming in from Nigeria or that have moved over from Nigeria that are in this webinar. So I'll use Naira as an example. I don't need to tell you how much Naira has reduced the value versus the pound over the last few years. It's been quite crazy. So imagine how much pound, and you'll know how much pounds are worth versus Naira, right? So if you had a UK property paying you UK rent in pounds, that would be a very good investment because the conversion back to Naira, if you were living in Nigeria again, would be very, very good. So that's not me saying yes for everyone it's perfect, buy a property, don't think about what's going to happen with your visa, but I'm saying there are options and it doesn't suddenly mean that you're going to lose the money that you bought this property on. It'll very likely to become a good investment anyway. So yeah, hopefully it's useful for me to touch on that, albeit a negative topic. The next pillar or the next key requirement is deposit. So do you really need a 25% deposit to buy? No. The reason that is such a thing, by the way, I don't know if anyone's heard that. Would be useful to see on the chat if people have heard that before. Is that something you've seen online? The reason that is because the majority of lenders in the market, there's about 100, 150 different mortgage lenders in the UK market. The majority do require a 25% deposit. But we don't need the majority. You only need one lender. And there is enough lenders, including lenders that are really cheap and lend at the cheapest rates, that don't need 25% deposit. So that's a context as to why, but it's not true. It's much, much better than that. So, firstly, what is the minimum deposit you can use? So in England, Scotland, or Wales, and I specify this, by the way, because we work with clients in England, Scotland, Wales, and Northern Ireland. But in England, Scotland, or Wales, you can use as little as 5% deposit. Doesn't work for absolutely everyone. There are some qualifying criteria, but for most people, it does. The interest rates are, of course, higher. It's important I mention that. Normally, we only fix the initial interest rate for 2 years. So, of course, if we were to use a 5% deposit, fixing the interest rate for 2 years, by the end of the 2 year fixed rate, we could look then at another interest rate anyway. So it's not always a massive negative thing that affects you very long term. If you were to use a 10% deposit, the interest rates are much, much cheaper. So it's important for us to have this conversation and decide between whether you should use or want to use a 5% or a 10% deposit. Generally speaking, I think if it's going to take you more than a year to save up to 10% deposit and you've got 5% deposit ready now, I think there's a conversation to be had about using a 5% deposit. Does that mean it's definitely the right thing to do? No, but it's worth exploring the option for sure. So, to refer back to what I said at the beginning about making this actionable for you, if you're thinking, okay, great, how much deposit do I need? How do I even build this out? Where do I need to go from here, from where you are today? I think there's three questions that are useful to ask yourself. One is how much do you have saved currently? So that's your starting point, right? How much have you currently got? Your next thing to work out is how much can you save monthly, realistically? Then it is when do you want to buy? And of course, when you want to buy and when you're able to buy depends on how much you're able to save monthly and also how much you currently have saved as well. So those are some good questions to ask yourself. You get your starting point, you can work out how much you're saving monthly, and then to be honest, you can work out how long it will take you to get to the point that you need to be. Now, when I'm talking about 5% deposit or 10% deposit, just so you know how to calculate that properly, of course, if you're looking at, let's say, a £200,000 property, then you would take 10% and that would be £20,000. Yeah. So if it's 5%, it would be £10,000 as an example. One important thing to mention about deposit is if you are interested in new build properties, and again, this is a different topic. A lot of people ask new build versus old build properties. I'm not going to go into that today, unless someone asks me at the end, of course. It's your question, I will answer it. Um, but some new build developers, quite a few actually, offer a 5% deposit contribution, which you can use 5% of your money. They would add in 5% of their money. So both of those together is 10%. And then that allows you to use a 10% deposit. And of course, the benefit of that is you then get the cheaper interest rates because it's a total of 10% deposit for the lender. So that is quite a useful thing if you're interested in buying new builds. This is a very important point. Deposit source really matters. To be honest, this is one of the biggest issues we can run into if people aren't careful. So, your own savings, whether that is in the UK or from abroad, is completely fine. Um, Gifts from family are fine. So, this is direct family members, siblings, brothers, sisters, parents, grandparents, etc. That is also fine. If you're lucky enough, of course, to have access to that. Gifts from friends, most lenders, there's only about one lender for visa holders that can accept that. The vast majority will not accept a gift from a friend. Agile, right? I'm using the Nigerian or the Yoruba word for it, but and forgive my pronunciation by the way, agile, is not acceptable. So lenders do not accept it. We get asked this all the time. People will try. I know that definitely. How many people are in here now? Roughly 50 people in here. Someone in here is going to know someone that has used Agile for their deposit. Um, that is the exception, not the rule. And what I mean by that is if you took 50 people that have tried to use Agile for their deposit, there's only going to be a small minority, a couple of people that they were able to use it. Why is this? Mortgage lenders don't allow it, so solicitors do not allow it. It is the solicitor's job to look at your last 6 months of bank statements and verify where the money has come from. If they see money coming into your account, they know what revolving saving schemes and Agile look like. They will just decline it. And the issue with that is you can get very late in the process, and then suddenly, it's declined. Your application's declined. You can't buy the house. You spent money on solicitors' fees, etc. It's really not a situation we'd ever want to put you in. So we're always very clear that that's not what we should be using for the deposit. I want to be clear that I have no issue with it. I know exactly why people do it. It makes complete sense. Having a revolving savings scheme that's community based is a fantastic thing. From a solicitor's perspective, they need to trace back where the money's come from. It becomes very difficult when it has originated from revolving savings schemes, round robin, agile. etc. So just important to be clear on that. Save up the deposit. Solicitors will need 6 months of bank statements normally. So to move to the next pillar, which is income. This is, I mean, all of these pillars or requirements are huge, but income decides how much of a mortgage that you can actually get. So the first thing that matters, of course, is how much you're paid. How much you're paid, I will give you some examples shortly of, okay, if you earn this much, this is roughly how much you can borrow. But of course, we can use your salary. So whether you earn basic annual salary or if it's an hourly rate, we can use your overtime hours a lot of the time. Normally, we need you to have done it for a period of time, but we can use that. If there are any bonuses, whatever it might be, second jobs, we can use those. So we can really start to add this all together to maximize the amount you can borrow if needed. It also matters how you are paid. So, what I mean by that is, are you on a permanent contract or a 0 hours contract? As I was mentioning, do you earn overtime or do you have no overtime, etc., for example? So, all of those things matter. You don't need to have been in your job for that long. So, people always think, I need to have been working for a year. To be honest, if you've got one job, as long as you've been doing it for about 3 months, 3 to 6 months, you'll be completely fine. If you've got two jobs, generally speaking, you need to be doing both of them together for 6 months. What also matters above kind of your income as well is your expenses. So you could have great income, but if you've got really high expenses like loans and childcare costs and credit card balances, that can really start to knock down the amount that you can borrow. Car loans is something we see quite often because there can be quite a big monthly expense that can reduce the amount you can borrow. So that's worth being careful about as well. So, how much can you actually borrow? As a rough guide, lenders will give you between 4.5 to 5.5 times your gross annual income. What does that actually mean? So, I'll break it down. So, if you had two people, let's say husband and a wife, both earning £30,000 per year. And that is the gross. And when I say gross, that is before taxes deducted. So that's not the amount that you're receiving into your bank. It's the bit that it says on your payslip before you pay money away to tax, unfortunately. So if you had two £30,000 incomes, husband's earning £30,000 a year, wife is earning £30,000 a year, that is £60,000 in total. If we could get 5.5 times lending, which there are lenders that we can do that with, particularly if you're using a 10% deposit, that would be a maximum loan of £330,000. You can then add your deposit on top of that to get to the purchase price. So I'll give you an example here to make this really clear. So let's say you've got a property that you've seen for £360,000. You're going to use a 10% deposit, which is £36,000. The mortgage that you would need would be £324,000 because obviously the 324,000 and the 36,000 equals the purchase price of £360,000. So in that example, with two people earning £30,000 a year with no major commitments, that would be affordable. Yeah, if we could get to a lender that uses the 5.5 times income multiple, which there are multiple available for visa holders. So hopefully that gives you a good explanation. Again, when we're doing questions at the end, if you wanted to pop in some details, I'm happy to give you rough ideas, but I would refrain from doing too specific, just because obviously we're all on a call with your names in, so you don't want to put too many details in. You can just reach out to our team afterwards, and we'll easily be able to tell you with a specific breakdown as well. The final pillar is credit score or credit profile. How much does this matter? And this is what people always ask, and how does it even work? So it matters quite a lot. You don't have to have a perfect credit score though. So although credit score matters, you don't need to have this amazing credit profile. And if you've got the deposit ready and you're earning income, it's really easy for us to tell, can we get your mortgage or not through doing an agreement in principle. And that's part of our initial steps of our process. So with the credit profile, how does this work? So there are what we call credit reference agencies. There are different ones. You might have heard of Experian, Equifax, TransUnion. and they all use different credit scoring models. So when people ask me, it's my least favorite question, by the way. So hopefully nobody asks it today. Is what credit score do I need? The reason that's my least favorite question is not because it's a bad question at all. It's a good question, but I can't tell you because they all have these different scoring methods. So you might have 700 could be a good score on Experian or Equifax, and actually when we go to a lender, they have their own scoring model as well. So it's almost impossible to tell. Of course, the higher the score, the better. That is the only honest and true answer that I can give you. The higher the score, the better. You mentioned about lenders already. So they have a look at it. They've got their own scoring model. They also look at payment history. So if you've missed any payments, it's really important to avoid missing any payments. And that includes things like utility bills, phone bills. So it's not just credit cards and loans. And as I mentioned already, I'm getting ahead of myself here, is the best way to know is getting an agreement in principle. And I'm going to talk you through the process shortly and when might be the right time to do that. Because of course it's important to build up the credit. And just by being in the UK, having a phone bill here and paying it on time, utility bills, credit card, yes, can help, but if you haven't got one currently and you're wanting to buy in the next 6 months or so, I wouldn't go and get a credit card because getting a credit card might knock down your credit score a bit as well. So important to be careful. That's the best way of us telling. Very important for me to talk you through some common mistakes as well. So I'm just going to highlight these. Now, I'm going to say this first one. You might think I'm biased because I'm going to say we are the specialist advisor and the solution. But trust me when I say that we have worked with so many people that have worked with other brokers first who have just got this incredibly wrong. And it is just a nightmare. It can affect your credit score. It can waste your time, more importantly. You might end up with a more expensive interest rate. You might not have an advisor that's really caring about what's best for you. So this is a big mistake to make is just working with any mortgage advisor or your local mortgage advisor. Unfortunately, the case is a lot of them just don't understand this to the depth that we do at First Time Finance because this is what we do. So be careful about that. I would say the solution to that mistake and problem is work with us. I am biased, but we are really good at what we do. Have a look at our Trustpilot reviews, and you will see that people will say, "I worked with two brokers before; they couldn't do it. We did." Be very careful of the missed payments on your credit profile. I mentioned utility bills, phone bills, in particular, especially utility bills, because when you move property, it's really important to make sure that that's been switched over or shut down properly. Some of these companies are really difficult to work with. The lender, unfortunately, most of the time will not care if you say, but it's not my fault. So make sure that you're paying it until you've cancelled it properly, and you're not getting into an argument with these companies because they will just register it as missed payments or arrangements paid, and it can really cause issues. If that has happened to you already, what you need to do is complain to the company, raise it essentially as a formal complaint and get it removed from your credit profile. If it was their fault, they will do it, but it takes some arguing and complaining. And a formal complaint is the best way of doing that. The final mistake is poor deposit planning. Now, I've mentioned about keeping the deposit trail really clear, right, and not using things like Azure and making sure that you haven't got gifts coming in from friends and stuff. Make sure that is clear and you'll avoid a lot of headaches later. Also, what comes with the deposit side is making sure that you've prepared for the additional costs. And some people are probably thinking, yeah, what about all these other costs, not just the deposit? And I'll tell you what these are now as well. So there's a couple of main costs. First one I would say is a survey. So you don't always have to get a survey, or you never have to get a survey. The mortgage lender will do a valuation on the property that you buy anyway. If you are buying an older property, getting a survey is a good idea. We're actually going through the process ourselves at the moment. We're getting a survey done. It costs money, normally somewhere between £500 to £600. But it can save a lot of issues later on because it will give you a breakdown of what might need doing to the property. So it can be a good idea. You've then got the legal costs, and this includes your solicitor and all of the other fees. That generally is between £1,500 to £2,000. You then have the mortgage broker costs. Now, I will say a good mortgage broker costs about £500. We charge £495, so essentially 500. We charge this much later on in the process. We don't charge upfront. It's only when we get you the result later on. There are free mortgage brokers out there, but my question to you about that would be: does free mean it's good? Um, Especially when it comes to this level of complexity, it doesn't. The reason we charge a fee is not actually so we make loads of money, not at all. It is so we can pay for the infrastructure and the team to really get what's best for you and get these amazing results. I showed you the team earlier. They're fantastic. We guide people through the process with proper care. And essentially, that is what it costs. And we would love to help. Stamp duty. So, this is the tax that you pay when you buy a property, is payable for first time buyers on properties over £300,000. So if you bought a property for £300,000, you would pay no stamp duty as a first time buyer. If you bought a property for £350,000, you would pay £2,500, so £2,500 as a first time buyer. If you bought a property for £400,000 as a first time buyer, you would pay £5,000. So yeah, it gets pretty expensive. So I'm now going to talk you through the home buying process, and we're getting close to the end here. So stick with me for 5 more minutes, and then we're going to jump into questions. Okay, this is really useful. It is based on England and Wales, by the way. So if there is anyone in Scotland, I didn't see anyone shout in from Scotland at the beginning, but the process is slightly different, not majorly, but slightly. So you'll see the first step on here is getting an agreement in principle. I did say earlier, I'll tell you when I think when this is a good time to do. So when you have almost got your deposit together. So if let's say you're aiming for 5% or 10% deposit, whatever you're aiming for, and you're going to have that in about 3 months, maybe 4 months, it's not a bad idea to reach out to us, have a chat, and we'll be able to talk you through things in depth, specific to your situation. We'll be able to get some documents from you and complete an agreement in principle. Now, I want you guys to know why it is so important that this part is done properly. And we have spent a lot of time and effort perfecting this process at First Time Finance, because it's really important that at this stage we've looked at documents, we've done all the calculations, we've spoken to lenders to make sure that this agreement in principle and what we're saying you can get is definitely what you can get. Sounds obvious, but a lot of mortgage brokers and banks, and if you go online to do an agreement in principle, will just ask you for a couple of details, tap in some details, and the agreement in principle will be done. Fantastic, it's very fast, but there's lots of room for error, because nothing's been sense checked. Whereas we look at all the documents, we look at all the information, we talk to the lenders, so we know we give you an agreement in principle, it's going to work. And that's exactly why our approval rate is 99%, by the way. And you can have a look at that on our website. It's because of this process. Step two, so only once you've got your agreement in principle, you can then start viewing properties in person. Of course, before you've got an agreement in principle, you can look at properties online, and that will give you an idea of how much deposit you need as well. But once we've got the agreement in principle, you can start viewing properties. So you would look online using websites like Rightmove and Zoopla, and find a property that hopefully you want to buy. You can go out and look at those. The next step, once you've found the property, is the process of kind of offering, negotiating, having your offer accepted. If you are buying a property that is not new build, there is room for negotiation. How much you can negotiate depends on the specific property. It depends on how motivated the seller is. I've seen people have offers accepted on properties that are 10% below the asking price, 5% below the asking price. I've also seen many properties go for asking price or more. It also comes down to how much you want the property as well. I mentioned we're going through the process ourselves at the moment. We're paying the asking price for the property, because there were other people interested. This was the house that we really loved versus all the other ones that we saw. So I think it's really important that you think about that when going through the process. Are we willing to lose this property when kind of offering? If it's, yeah, you know what, this is our number. We actually saw other properties we liked and offered on, and we actually stuck to our guns at a certain number and didn't go up because it for us it just didn't make sense at that point. So yeah, important to consider that. Once your offer is accepted, this is where the mortgage application process happens. So this part here. Now, from submitting your mortgage application to getting your mortgage offer, there's a few things that happen. So they check your documents, they do a valuation. Once they're happy with everything, they issue that offer. Yeah, normally takes about 2 to 3 weeks in total to get that offer through. That is a process we handle entirely, as well as the agreement in principle process, of course. The next stage is the legal process. So this is what actually takes time. So you're probably thinking, okay, well, if it only takes 2 to 3 weeks to get the offer, why potentially, if you know, does it take so long to buy a property in the UK? Because the whole process generally, from having your offer accepted to actually moving in, takes about 3 to 4 months. So it takes quite a long time. And a lot of that is because of the legal process. It's quite slow. So you'll have a solicitor that does all of this work. This is where you would also potentially get a surveyor to do a survey and check all of those issues. After all of that work has been done, you can then exchange contracts, as it says here. And that is where you, as the buyer, exchange contracts with the seller, essentially like that. And that is where you are legally tied into buying the property now. The next stage is completion. So completion is where you get the keys. Normally that is a few days, maybe a week after exchange of contract. So it happens fairly quickly afterwards. And that is when you move in, essentially. So that is everything for me to tell you for today. Now I'm going to stay as long as I need to answer all the questions. Thanks for sticking with me. I think we got to about 20, 25, maybe it was 30. Must have been 30 minutes of me talking in the end, so apologies if it was a bit longer than initially promised, but hopefully you found that helpful. After this, we are going to send an email out, and it will come to you tomorrow. It's not going to come this evening, and it will have this document attached, which has got our website address. To be honest, if you type in first time finance into Google, we will come up top, so you can just click on our website, or we should come up top anyway, but make sure it is us at first time finance, so this web address. On there is a button to WhatsApp us. So you can click the send us a WhatsApp button on our website, and it will actually connect to my personal WhatsApp. So you can drop me a WhatsApp. I'm happy to message you back tomorrow, and we can get chatting. There is also a button on there that says start your mortgage plan. That is just a short form you can fill out, and one of the team would then reach out. There is also a button that you can call our team, and one of the team, maybe Jamila, maybe Ibamina, that might answer the phone tomorrow. So that would only be in between the hours of about 9 till 6. Also, you can check us out on Instagram, TikTok, LinkedIn, wherever you prefer. My name is Ripley Salguero. Company name is First Time Finance, and we can stay connected on there. We put a lot of content out. Hopefully, you find it useful. So if you're in the earlier stages, then you can follow along and reach out when you're ready. Thanks for listening. I will be very happy now to take questions. So please feel free to put these in the chat box. And I'm just going to check now just to see if we do have any already as we've been going through. Right, okay. It looks like we do have quite a few. Let me see. Cool. We've got some questions already, so I'm going to get answering these. Perfect. So if you have any questions, please do put them in the chat box. I'm going to scroll up as far as possible. Yeah, fine. Okay. And I'm going to start answering these as we go. Right, let me just stop sharing my screen because it's probably a bit bright and yellow in your faces. So, at what point are we advised to get a solicitor? Very good question. To be honest, you don't really need to think about the solicitor until when you're offering on a property. The mortgage broker, so ourselves in this instance, is someone you work with during the earlier stages. We have solicitors we work with that we can introduce you to as well. So it makes it very easy. You are free to use whoever you'd like. So if you have a solicitor you want to use, but you don't need to arrange that until when you're offering on a property. What are the pros and cons of new buyers? I like the fact you asked that, and I think that was just around the time I was saying I'm not going to talk about this today unless someone asks me. So fair enough, you asked. I like it. Um, Pros for a new build for me are obviously I'm stating the obvious here. It's brand new. Nobody's lived in it. Brand new. Everything's new. Fantastic. There's no major works or issues, etc. Um, for me, that's about it. You would be living in a. Some people this is a pro. Some people this is a con. You'd be living in like a community of houses that is being built and designed like that. Some people like that. For me, that's a con. That's a negative. The cons for me are more expensive, less visually I don't prefer them, but some people do, right? I prefer something that looks a bit older that I can put my own stamp on. Other people really like them. I think the cons are, yeah, they're more expensive as well. I would add a pro to that as well, actually, for new builds. If you can get the deposit incentive that I spoke about earlier, the 5%, that can be a really good benefit. Really, I think it comes down to personal preference. This will be a house you're living in, right? Presumably, unless you already own a house. If you do, drop a comment, and we can obviously I'll answer questions about if you were buying it as an investment. But I think for a house to live in, it needs to be something that you really like. So it's personal preference, I think. So we've had a question saying, I heard when you start a mortgage process, you don't have to use your credit card, Klarna, PayPal, and the likes. How true is it? I don't have to use. I'm not 100% sure what you mean by don't have to use. If you're asking, you don't have to have had credit cards, Klarna, PayPal, etc. previously. No, you don't need to. If you're asking, you don't need to have cleared the balances. So, for example, you have £1,000 outstanding on a credit card. To be honest, no, you don't need to clear the credit card. It just gets factored into that affordability calculation that we were doing earlier. So then it might reduce the amount that you can borrow. But generally speaking, if you've only got a few £100 or up to £1,000 on one credit card, it's probably not going to cause too many issues anyway. Um, Olucci said, okay, Rosaline said, I'm in Scotland, although I have met some of your team already. Perfect. Yeah. So the process I was explaining was England and Wales, but yeah, the team will obviously talk you through the right process for Scotland. They probably already have. So that's fantastic. Um, how can I reach you? So Victoria's asked, how can I reach you if I want to use your service as financial advisor? As the first question, so please just type in first time finance and visit our website. As I said, we'll send out a follow up tomorrow email. So you will get it to the email that you registered to on this webinar. Um, and that will have kind of the links and the details in there. But if you wanted to skip ahead, you can type in first time finance on Google and click the WhatsApp us. So send us a WhatsApp message button, and yeah, we will reply. Question two from Victoria was, do you have an idea of what the loan interest could be with different lenders? Yeah, it's a good question. I don't talk about it on these typically because I'll answer your question directly, but the reason I don't talk about it on the webinar is because they change so quickly. Particularly with them being recorded, I could say an interest rate today and it's like it's not available tomorrow or next week. The interest rate range at the moment with a 10% deposit is between about 4.4%, maybe a little bit less, 4.3%, up to 5.5%, depending on the lender. And that's applicable to visa holders. If you were to use a 5% deposit, the interest rate ranges from about 4.8% up to about 6.5%. So it really depends on the lender that we can access. All of that is based on the four key pillars that I was talking about earlier: length of time in the UK, how long is remaining on your visa, deposit, income level, etc. Um, Obed said, I'm in Scotland. What is the process like in Scotland? So the major difference in the process in Scotland is that essentially you don't have the exchange of contracts process. It actually becomes legally binding at the point of the offer. And because of that, you actually get given a home report, so a survey, as part of the pack to review when you're considering a property. So actually, you get a lot more information up front about the property versus in England and Wales. In some ways, I prefer the process in Scotland. In others, I don't. And the reason I say that is because typically in Scotland, you will have the valuation on the home report. So the valuation of the property might be 200,000, and then they do something we call sealed or closed bids. So you might have five people that want to offer on a property. We all know the valuation's 200. So people start going, I'll offer 201, 205, 210. And lots of times people end up overpaying for properties in Scotland. Just the way it works there, it's interesting. But that's really the only major change from or changes from what I mentioned. Sorry, you've got to excuse me. This is a lot of talking. If I get a mortgage as a residential property, do lenders agree to change it to a rental mortgage just in case I decide to leave the country? What are the possibilities of them accepting change the mortgage to a rental one? Ajiro, that is a excellent question, by the way, I must say. There is something called consent to let. Consent to let is essentially the lender allowing you to rent the property out whilst being on a residential mortgage. So a lot of lenders will grant that, and a major reason for them granting it to you normally is if you are leaving the UK. So it's quite easy to do. Normally, we would only do that until the end of your current fixed rate. So if you were on a 5-year fixed rate, you're 2 years in, you've got 3 years left, you could be on that for a few years. And then we might need to look at, okay, can we remortgage this to a buy to let lender specifically, or a rental mortgage lender? If one is leaving the UK, can you rent the house out and then use the rent to pay the mortgage? Yes, exactly. In simple terms, yeah, you can use that rent to pay the mortgage. There are certain considerations, tax, etc., that we would have to factor in. I'm not a tax advisor, but yes, in essence, that is what you could do. Irene's asked, how easy is it to get a mortgage as a single person, so single income? It's easy in the sense that we can get you a mortgage. It just depends on how much you can borrow. Whether you can borrow enough to buy a property entirely depends on the area that you live in, unfortunately. Because in the south and the southeast in particular of England, property prices are so much more expensive. If you are you essentially need to be earning a quite a large amount in order for it to be possible. If you live in the Midlands, North, Northwest, Northeast, Wales, Scotland, it's a lot more possible to buy a house on a single income. There are schemes like shared ownership that we can potentially look at. So there are options, and it's definitely worth reaching out to us to have a chat. There's no harm in doing so. That's the only way of finding out, really. So yeah. Um, Udoka says, if the house I want to buy has a deposit boost scheme, can I access? Yes. If you're, can I access being an immigrant on a visa was the question. Yes. If you're referring deposit boost scheme is the developer's deposit boost, then yes, we have loads of clients that have used that on visas. So yeah, it's fine. Um, and that doesn't count as public funds either for what I was mentioning earlier, because it's not public funds, it's the developers. Sarah has asked, do you only give one-time advice or do you take clients through the whole home buying process from start to end? Again, fantastic question. So we actually guide you from the beginning right to the end. Really good question, actually. We do. So I mentioned we do the agreement in principle. I mentioned we give the advice and submit the application and get the offer. But we are there with you right until the end, and we manage all of that inside a WhatsApp group chat with the team. So I say group chat. It'll be yourself if you're buying with a partner, and it would be your advisor and one other member of the team, and we make communication so easy on there as well. If you want to have a phone call, we're there to have a phone call. It's really, really easy. Udoka said, what if I just save on my account and not have any debits on it? Will it affect me negatively? Not really, no, not at all. They might ask, okay, where was your rent? Where was your bills? So that's important for us to know where are you then paying the bills from whilst you were saving up that deposit. But no, that would be fine as long as we can prove where the deposits come from and any expenses and stuff have been paid and we know where from, that would be fine. Council new homes projects that come with 30% discount for new homes. Is it a property for immigrants to consider? If you are referring to the first home scheme, which I think you are, so correct me if I'm wrong. Um, yes, it is. It is possible. We have had clients buy using the first homes scheme or the discount market scheme in some areas. It's called. It is possible. We're limited with lenders. There are about three or four lenders that we can use for applicants on a visa. But yes, it is possible. God's will said, is your company a mortgage advisor or broker? So yes, we are a mortgage. I mean, we're a broker. People do differentiate between the terms mortgage advisor, mortgage broker. To me, they mean the same thing, really. I don't like the word broker because it sounds very transactional. We advise you, we guide you through the process. But yeah, we're a mortgage broker, whole of market. We've got access to all lenders. Secondly, the mortgage paid together with the interest, or are they paid separately? Yes, generally they are paid interest and capital, meaning you're paying the loan down each month. Good question. Um, does having a higher deposit aid the mortgage acquisition process at all? Yes, it can mean you get cheaper interest rates. So if you have a higher deposit, you can get cheaper interest rates. Not by much. So as long as you've got 10% deposit, you should be quite good on interest rate. But it can help things a little bit, yeah. Also, is it best to build as a couple? I think, presuming you mean buy a property as a couple or individuals. If you're buying your own home, and you're together, husband and wife, for example, buy it together. It's much easier in the UK with both incomes to buy it together. I'm not a tax advisor, but there pretty much aren't the tax benefits that some people think there are if you are legally married anyway to buying properties separately. So if it's a home for both of you, for most people, it's better to buy it together. Ayodele asked, how easy is it for children to inherit their parents' property? Really good question. Something that we do, which is very important, is setting life insurance up for our clients, and we do this within a trust structure. So doing this makes sure that the mortgage can be repaid, meaning there's no outstanding debt on the property, and then the property is fully there to be inherited by the children without any issues at all. So we do that as standard. Obviously, we discuss it with you when we go through the process, the insurance side. But yeah, it's something that's really, really important. And it's good that you're thinking long term as well. Deborah asks, do you help with searching for houses for someone? So it's not part of our core service. So if you ask us what our service is, it wouldn't be included. However, Jamila, who I showed you on the slide earlier, um, does do some of that for our clients. We can't go out and find the entire property for you, but if we have a client that's tried and they're struggling, they're not sure what to do, we will help them, of course, right? We'll be there to guide you through this process, but you would be the one to kind of go out, find and view the properties. As a couple, do you need a joint account before you can buy? No, you don't need a joint account at all. So you can just have two separate accounts. You just need to choose one account that you would pay the mortgage payment from. That's the important thing. So if that means that actually you'd prefer to have a joint account, then open a joint account that you can then do the mortgage payments from. Mohammed has asked, is the Help to Buy scheme still available for first time buyers up to date? If the scheme is already scrapped, what alternative is there? Yeah, this is really a shame because the Help to Buy scheme doesn't exist anymore. Was fantastic, honestly. Was really helpful, but it's just not around anymore. The only other scheme, there's the first home scheme, which I mentioned, where you get a bit of a discount, but then when you sell it, you have to pass the discount on. And also, there's not that many properties under that scheme on the first home scheme. There is also shared ownership. I'm not a massive fan of shared ownership in general, but if you can't buy a property that is big enough for your family, based on your income, based on your deposit, shared ownership is a good option. So if you want to explore the different options, please do reach out, and yeah, we'd be very happy to help. I've asked that one about inheriting property. Victoria said, can you help if I'm already in the mortgage process in case my financial advisor can't give me a lender? Yeah, so if you haven't submitted a full mortgage application, so That happens, just to clear that up, at the stage where you've had an offer accepted on a property. You would then submit the full application. If that hasn't happened, you can switch financial advisor, mortgage advisor at any time. If you feel more comfortable with us, like a lot of people do, and I'd hope you would, knowing that this is what we do day in, day out, and we're really going to guide you through the process, you can just say, I mean, yeah, not necessarily have to say anything to them, but you could say, actually, we're sorry, we're working with someone else. Just reach out to us. We would have a meeting with you, one of our advisors, Henry or Clint, and we would be able to then guide you through this process properly. Um, Down to the last question now, guys. So thanks. The majority of people have stayed right to the end, so I appreciate it. I am a little bit tired now, and I'm sure you guys are a bit tired of listening to me. I see a thumbs up from Victoria. Please do reach out. We'd honestly love to help. Would love to see, Victoria, that you become the next Trustpilot review on there, and so many others that have joined today. Thanks for the thumbs up. It's really nice to see. I will just answer these last questions. I think there's one or two. Does shared ownership have equity over time? How easy is it to remortgage? Shared ownership, yes, you might buy 25% of the property initially, and then the other 75% is owned by a housing association, and then you're paying rent to them for that 75%. That's why I don't really like it. But yes, you can then actually increase your equity over time until you own the whole thing. So it's not bad. It just depends on your situation. Again, that would be something for us to have a conversation with you again after this. So yeah, feel free to reach out. Do we advise on first home scheme for immigrants? Uh, Yes, so we do mortgages. We have done them in the past. As I said, there are not many properties. If you go online, Iola, and have a look at, right, okay, first home scheme properties in Bristol, for example, wherever you're living, so first home scheme properties in X location, you'll find there's really not that many. I struggle to find them in some locations. You might be lucky, you might live in a location where you go, wow, there's lots of choice here. Um, if there is, it's definitely worth us having a conversation about. The only real thing to note is you'll get about a 30% discount of the market price, but when you sell it, you have to give that 30% discount on, which isn't a bad thing, right? You've got a 30% discount, you're giving the 30% discount on it. It's fine. You're just getting 30% less of the benefit of owning that property or of the increasing value. Mohammed says, "Thank you very much, Ripley." So yeah, thank you very much. Also, I really appreciate it. Adekunle, if you have a mortgage and you leave the UK, how quick will you get your equity after selling the house? As soon as the house is sold, mortgage lender is repaid that day, and then you get your equity, your money back. The amount you get back depends on the value of the property at the time of selling it. It depends on if there are any additional charges, solicitors' fees, all these kind of things. So you get it pretty quickly, but it does take, I'd say, 3-4 months to sell a house. So that's something to factor in. How is equity calculated? This is the last one now, by the way. I won't do any more questions. Well, actually, if you ask me another one, people can. I was almost feeling bad for people staying, but I guess anyone can leave when they want. By the way, I will maybe do another 5 minutes if there are questions because I feel bad if I just hang up. I want to help. How is equity calculated for Deborah? Essentially, I want you to imagine a property value here. Yeah, let's call it £100,000. Let's say at the beginning you put in a 10% deposit. So that's this, right? Out of this. So you put in 10%, that is £10,000. That is your equity, right? Your deposit is your equity initially. Now, what changes over time? You've got your deposit here, this is your equity. Is if the property increases in value, your equity grows, right? Because as the property increases in value, your mortgage doesn't increase, your equity increases. As you also pay down your mortgage, your equity increases because you're building up the equity in the property. So, how is it calculated? Depends on how much you're paying your mortgage down, how much the property increases in value over time as well. But essentially, at the beginning, your equity is the same amount as your deposit. It then just grows over time. Mohammed says we are looking forward to receive the contact details from you soon. Hopefully by tomorrow so we can get in touch. Yes, please do. What I will do, is it helpful actually if I just share them on here? We will send out the email tomorrow. It's just we need to get everyone's contact details together. If I just share these in the chat quickly as well, our website link. So honestly, the easiest thing is just to check us out on our website. Can I do www.firsttimefinance.co.uk? Has everyone found that helpful, by the way? I really hope you have. Um, this website, it's been good to speak. I know lots of people have interacted on the chat as well, which is really nice. Really appreciate it. It's always a pleasure to help everyone as well. Honestly, I do mean that a lot. Thanks, Victoria. Thanks, Oluwole. Thanks, Maureen. Right, hopefully, I'm going to send the website in. Does that work? I'm giving it a click. There you go. If you click that button in the chat, first time finance website, it's going to bring you to our website. At the bottom, there should be a send a WhatsApp message button. And yeah, you can click that. You can drop us a WhatsApp. It goes through to my WhatsApp number currently, by the way. So I will reply to you tomorrow. I'm going to spend some time going through all these hopefully nice messages in the morning. There you go. I've got it on my phone. You just click a. I've got my blurred screen. You can't see it, can you? It's not working, but you'll see what I mean. Thanks, guys. Yeah, really appreciate you all joining. And yeah, hope you found it helpful. Please do get in touch. Honestly, we would love to help you. Whether it's myself, it'll be me replying to the WhatsApp, but whether you end up working with Clint, Henry, speaking with Jamila, all of our team, I built a lovely, happy, friendly team, helpful that all want to help as much as I do. So yeah, honestly, really appreciate it, guys. Hopefully hear from you soon. Have a good evening. Thanks again, and we'll send out the recording and stuff and details tomorrow. Thanks, guys. Appreciate your time. Cheers. Thank you.